Gold has snapped back with a V-shaped rebound, reclaiming the $3,300 level. Is it time for us to confidently battle more upside from here? And what kind of new information should be priced in? All that and more in this episode of As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So over the past week, gold stacked a textbook V-shaped reversal, with bulls taking back the reins. The rally has been fueled by Moody's downgrade of the U.S. credit rating, alongside growing uncertainty around U.S. policy direction, trade deal negotiations, China's strong demand, and geopolitical tensions, etc. That said, gold's upside remains capped by the Fed's wait-and-see stance on rate cuts and easing concerns over a major escalation in trade friction. So now, if we take a look at the gold against US dollar daily chart, we saw a sharp pullback early last week, followed by a strong recovery that pushed prices back above the $3,200 mark by the weekly close, suggesting solid dip buying interest. And heading into this week, momentum has continued to build, with gold reclaiming the key $3,240 level and breaking above its 5-day EMA. Bulls are now eyeing the 61.8% Fibonacci retracement from the downtrend since May 7, and I feel like a successful break here could open the door for a short-term move towards $3,400 level, or even a retest of its record high at $3,450. While on the downside, watch the uptrend line from May 15 and early April's local high around $3,168 for potential support. Well, I feel like one key driver behind the rebound is obviously the growing concern over the U.S. fiscal health, highlighted by Moody's downgrade. The institution suggested if the 2017 Tax Cuts and Jobs Act is extended, it could add an estimated $4 trillion to the structural deficit over the next decade, excluding interest payment here. In the short term, weaker U.S. credit has boosted safe haven demand, while in the longer run, central banks are likely to continue adding to their gold reserves. So both factors are broadly supportive for gold. Adding to the mix, a new bill proposed by the Trump administration, combining tax reform and healthcare changes, was recently rejected by the House Budget Committee. This highlights internal GOP divisions and the difficulty of balancing tax cuts with fiscal discipline, rising policy uncertainty, and giving gold another leg up. That said, the downgrade itself wasn't a total shock. Moody's move merely aligns with ratings already issued by S&P and Fitch. As such, the market had largely priced it in. Going forward, fundamentals and some upcoming tariff negotiations will likely have more influence on gold than the downgrade headlines. While on the data front, survey data like the University of Michigan's Consumer Sentiment Index is still looking pretty downbeat, but April's cooling CPI and stronger than expected retail sales suggest the Fed has reason to stay cautious. Fed officials continue to emphasize patience on policy changes, and at the same time, reduced fears of a full-blown trade war are easing recession concerns, tempering rate cut bets, and in turn weighing on gold. As for tariffs, Trump has said the U.S. will finalize tariff rates on trade partners within 2 to 3 weeks, with pressure particularly on the European Union and Japan. But since both have already engaged in talks with Washington, the potential impact on gold may be more muted this time around. So all in all, gold has bounced off the lows and bulls are back in charge for now. The downgrade, policy uncertainty, and ongoing geopolitical risks are all supportive. Strong buying interest from China, including central banks, institutions, and the retail investors, is supporting the gold trading too. But with trade tensions unlikely to escalate dramatically, at least in 90 days, gold may lack the fuel for a full-blown rally. And looking ahead, this week doesn't bring many Tier 1 US data releases, to be honest. Market attention will remain focused on geopolitics and trade headlines, along with any signals from Fed officials regarding the timing and path of future rate cuts. And speaking of this, actually, my colleague Chris Watson also wrote a very insightful analysis on precious metals that's absolutely worth a read. So I've included the link in the video description if you are interested. That's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading.